Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, into the action we go today on this Wednesday, December 11th, 2013. Weakness continues on Wall Street. All right, we've talked about the multiple signals. Every day I do these videos, we've been talking about them, and you continue to see a market that is not really getting crushed, but it's just kind of drifting lower. Today's one of the bigger down days we've seen, with the S&P down 15, Dow down 71, NASDAQ down about 44.5 points. But bottom line is, the signals were on the board, on the charts. Didn't take a genius to see them. I pointed it out, and I didn't think I'm by any stretch a genius. But the bottom line, let's go over them quickly again so you can learn. Here was your high from November 29th. All right, that high again, that was the day that followed Thanksgiving when the markets were closed. It was a half day. The markets hit the high, and you reversed, and that began a little bit of a sell-off down to these recent lows. Now, quickly we bounced back up, and this is where the weakness started to show itself. On Monday, you had three pivot highs, triple top right there intraday, that came close within pennies of this all-time high and couldn't even touch it, let alone break it. All right, when it does it three times like that and none of the times can even touch it, that is a sell signal. That's a signal that you're seeing selling into that level. And the funny thing is, you have to look at it from this direction. Usually, you're not surprised to see a level get tagged, like a double top, like the high from the 29th right here, get tagged, and then you see some selling. But when you see the selling come in even ahead of that high, it is a dead-on signal that institutions or bigger players are unloading. All right, they don't even care about getting at that high or shorting at that high. They just want to get out of their positions. They're willing to take a worse price by selling it lower just to get out. And sure enough, from those 3 days, 1, 2, or those three tops right there intraday on Monday, look at what the market's done. Down, down, down we go. And now it's interesting because we're actually coming right into this gap fill area and then the lows from about a week plus ago. And this is where it starts to get interesting because we're still stuck in that neutral-ish area that I've discussed with you guys. And I want to go over that because I think it's very, very important. All right? So what I've said to you guys is very simple. All right? I've told you guys, as long as we stay above this pivot high without confirmation below, you are neutral, all right, up here. So neutral above this line up till this high pivot from the 29th. If you're in between these two lines, the 177.50, 180, 175, neutral. All right, doesn't mean we can't have a little bit of downdraft, which we're seeing, but ultimately neutral-ish with some weakness showing. All right, if you confirm above 180, 175, you float higher into the end of the year. Probably have about 2 more points on the SPY. Nothing major from that high, but another 2 points higher from that area. Take us up to about 183.50, give or take a little bit. If you confirm below 177.50, you could see some continued downside into the end of the year, which would bring you down to about the 174 level. All right, 174 would be your low end. Once we get into January, if we've confirmed below 177.50, that is a major issue for the markets. That is an extremely bearish issue. Confirming below 177.50, very bearish. Confirming above 180, 175 on the SPY would be neutral to bullish. Why only neutral to bullish? Because the daily chart continues to show us that you can't get above these upsloping trend lines by very much. All right, so you're capping your gains by that 3% band that I talk about in every video, and therefore there's not a lot of upside. You wouldn't go hardcore bullish above 180, 175 because it just doesn't have much room. Yeah, you'll get a little bit of upside, a couple bucks upside, but that's about it. All right, so again, keep an eye on these levels. Unbelievably important. One thing I think is interesting about today, if we close where we are today on the daily chart, we will close below the 20. Now, closing below a 20 MA means diddly squat. It really does. However, if you confirm below the daily 20, you could see that test of the 177.50 level and maybe even a little bit of a move lower. So there's some interesting factors here at play that warrant us watching. All right, so again, nice little candle here on the daily. Again, very interesting. See this pivot top? This is where on the intraday we had those 3 little tops. Never took out this high right here. Came so close, never took it out. Came within literally 7 or 8 cents. And that's how close it came. So that's a little bit of a bearish signal. Interestingly enough, you could actually make a case that you have a head and shoulder pattern there because it never took out that high. Neckline would be right here at the 178.5 level. A break of that would actually send you down to about the 50 MA, which, by the way, I told you that was the low range into the end of December, which is 174. Now remember, next week, Tuesday, Wednesday, Federal Reserve FOMC meeting. Wednesday, we get the FOMC statement. Last statement from Ben Bernanke, I believe, as he turns over the helm to Janet Yellen in January. Will they taper? Will they not taper? These are the questions we must ask, and we will find out. All right, market's getting a little skittish. There's also a big discussion in Congress about can they get a spending bill done. That's kind of up in the air, although looking likely. The market's probably a little bit nervous about that as well. All right, let's take a look at a couple other things today. Let's take a look at the dollar UUP. Down another penny on the day. I've continued to be bearish. Ever since we took out this 50, I've gone into a negative bias on the dollar. That continues to be the correct move. You have support right down here, clear and obvious support. And your secondary minor support is right here, and you continue to hold above that. All right, so these are your two support areas. You're on minor. This is just a minor one here. This is a major down here. Okay? All right, so continue to have a negative bias on the dollar, even though you're at minor support right here. GLD. Small pullback after yesterday's big up day. So far, this could be the start of bullish consolidation, although we need more days to consolidate before it could be viewed as a long play. But right now, that is exactly what we're seeing here in the charts with a small pullback off the big move up. If you make a good bull pattern above this 20 MA for the next few days, look for a long play. I would say starting next week, early next week or so, maybe Tuesday, Wednesday. If you've gone sideways to lower and you're still staying right around this 20 MA, look for a long play on gold. You should get a pop. If it doesn't form that way, throw it out the window. There's no trade there whatsoever. And that's one of the key things I want to just impress upon you guys. Always remember, if the chart pattern forms with price pattern time formations, it's a trade. You must wait for the time factor, you must look for the right patterns, and you must look for the right points. Right? Price, pattern, and time. It's the PPT methodology. If you jump the gun and take a trade when the pattern isn't fully formed or not quite at the level, you run the risk of being wrong, because the key is when everything aligns. It's like the stars, moons, and suns aligning. When it all aligns, that's the day. All right, that's like if you think about a solar eclipse or a lunar eclipse. There's one specific day, one specific time that it all aligns. You know, the sun, the moon, and the U.S. and the Earth, and so forth. That's like a time count. Right? If you're going to do it a little on this side or a little on this side, you run the risk of being off on your days. You got to do it when it's there. That's how you maximize profit and get in the best trades possible. All right, for instance, I talked yesterday about shorting the IBB, which is the biotech index. Today, down another $4. All right, we are in the money on this trade already $7, guys. All right, already about $7 in the money on this trade just from yesterday. All right, this was a no-brainer because the stars, the moon, and the sun aligned. Everything aligned. I could see the writing on the wall on Celgene. Celgene had a beautiful little 2-Joe doji top right here, all-time highs. All right, Gilead Sciences, GILD, was reversing off this pivot top, coming down hard yesterday, nailed that. I mean, I could go on, and if you just look at the IBB daily chart, inside bar pattern here, this is a bearish pattern off of a top here, all right, classic little sell signal. Now, you have a little bit of support right here, which you kissed today. That's a little gap fill, but honestly, you're probably going to go down to the 50 MA over the next couple days. I'll probably take half off the table at least around the 210 level, which would be about a $12 gain. Well, that's a nice gain for a couple days. If we were to hit that tomorrow, 3-day gain, man, $12, just like that. Basically 5%. All right. In any case, another stock that was a big winner, and I talked about this in this very video. If you watch these free videos, you get gems too. You don't get as many gems as you get in the research center, but you get gems. ECTE. All right, you can see I day traded it today as well as selling my swing trade position. Those buttons are signaling that. But the point is, we were buying here. My average price was $270. I talked about it in this very video going back a few days. All right, $270. Today's high, $365. A dollar essential gain on this play. Basically a 30, 20, 25%, 20% gain on this in a few days. Members made a killing that had this. Killing. Thousands and thousands of profits. I pocketed about 5-6 G's myself. I just had 10,000 shares. All right, between my first half sell and my second half sell, I mean, just monstrous money. All right, just such an easy play. This was one of the best charts out there. Gap up, retrace into two moving averages, rounded bottom into gap fill right here. And sure enough, that's the move. And we all sold this morning, moved right out. Profits galore. All right, what else do we have? I scalped the IEP today. IEP was a great scalp, guys. All right, if we go to the intraday, we can see it here. All right, my scalp level, I gave the chat room. I actually did 2 scalps on this today, but the last scalp was a Pierce of 114. I told them 114 to pick it up, and look at the bounce. Doesn't look like a big bounce, but actually that's a $2+ bounce off the lows. Just to show you the daily chart here, why did I think that that level was right? Because this consolidation pattern, draw it right across. Look at this. And I gave this level out in the chat. I said, at the 114 Pierce, buy it. And sure enough, look at that bounce right there. Doesn't look like much, but believe it or not, it's about a $2 bounce. Which, you know, again, on 1,000 shares, $2,000, just like that. On an easy play. Easy play. You know, when you can start making, and this is the thing we were talking about, you know, you tell someone, you know, as a day trader, let's say you don't tell them what you do for a living, or even as a swing trader, but as a day trader, you don't tell them what you do for a living, and you just say, yeah, I make $2,000, $2,500 a day. They'll say, wow, you must be like the CEO of a company, or you must be like, you know, some big wig on wherever. And you say, no, I actually work from home. I trade out of my PJs, and I just trade charts for a couple hours in the morning, and I make that type of money. You know, watch their eyes blow up. And that's essentially what you're doing here. And that's what you can do. You don't have to work on Wall Street and go in a suit and tie every day and, you know, do whatever you got to do. When you learn how to day trade, it is the biggest freedom ever. Trade for a couple hours, make thousands of dollars, spend the rest of your life doing whatever you want. All right, guys, enough of that. I'm going to get going. Take the 7-day free trial here to InTheMoneyStocks.com. The 7-day free trial for the Research Center is for investors and swing traders. If you want day trading, the Intraday Stock Chat's your place to be. Come join us. Get swing trades, great swing trades. The IBB, the ECTE, all of these big gainers. That's in the Research Center. If you want day trading stuff like the IEP, which was a couple dollar bounce, there it is right there for you in the Intraday Stock Chat. Take care, guys, and come join InTheMoneyStocks.com.